Manages an insurance portfolio worth at least 155 billion pesos, offering 3 peso denominated funds. With us more is Angie Pacis, President and CEO of AIA Investment Management and Trust Corporation. So good to see you, Angie. Thank you so much for joining us.
Thank you for having me, Kathy.
And on a very critical day, my goodness. So what's it going to be? I mean, I've had 3 guests on the show. You're the 4th. 2 of them said it's going to be a rate cut. That's 25 basis points. But the 3rd one said it's going to be a rate pause, only because of inflation concerns from the U.S. and how the Fed is signaling that it might be a concern, and they're not in a rush. What's yours?
Well, our bet is they will not upset the signaling. The BSP will not upset the signaling that they've given the market, so they will cut. But you know,
cut by how much?
25.
Right, because 50 would be so disruptive.
Oh
wouldn't
yeah,
it?
and 50 would be. I mean, they're doing it so that just to not to upset the market. Because if you've signaled the 25 basis point cut and all of a sudden you don't do it, that's gonna really unravel the market. So 25 they're gonna hold, but probably the messaging after is that, you know, they're going to wait and see what the Fed does. Of course, that's not the exact wording because they would want to be independent. But the reality is it's a follow the leader game. If the U.S. doesn't cut, you just can't keep cutting your own rates without affecting your...
Which leads us to the markets. Who's following who?
I
read a down market right now. I was thinking it's buy the rumor, sell the fact, but it's the other way around so far.
Yeah, well, always sell on news, right? It's like because the market always anticipates. So if they're talking about the rate cut, they'll announce it, but it's not going to be market moving because the market already expected it. What is dangerous is if, and that's not our bet, if they don't cut, then you actually see the market going down very fast.
Yeah, but you know, I spoke with Japheth Tantiangco of Phil Stocks, and he said that the danger really is in what happens after.
Yes.
Because how much further can the Bangko Sentral go in its rate cutting in order to signal that it wants growth to pick up, inflation's not a concern? Are you as concerned?
Well, if you, right now, because of the tariff issues, the potential impact on inflation, you know, people are feeling iffy about the ability of the central bank to cut. But if you actually look at the data, yes, the inflation picture is at risk. They've adjusted it upwards, but still well within. Risk-adjusted inflation is still well within the Bangko Sentral target of 2 to 4%. And the risks are really just coming from abroad. So they're responding to that. But we actually, if you look at the economy...
Yep. You know, we're on tenterhooks here. I mean, Trump is going to report on the reciprocal tariffs, and that's what Nomura said would be much of a concern because we export 2.6% of our stuff to the U.S. That's going to get hit, and it could be inflationary.
It's definitely, it would be inflationary, but if you really look at it, 2.6% of your net exports as a percentage of your general economy can be easily set off by a stronger consumer, which is what we expect in 2025. You know, it's been sluggish. It's 3/4 of the economy, consumer spending, 3/4 of the economy. It's been largely flat over the last 4 years, but because of inflation. But salary increases have actually caught up with inflation. It hasn't really, the inflation didn't really dampen didn't really reduce consumer demand. Now with the boost, with the wage adjustments catching up with inflation, we think it's going to be a stronger consumer in 2025.
And stronger Valentine's Day, perhaps, with a lot more spending on those flowers. I wanted to get to your investment trusts because you have 3.
Yes.
How is this all impacting how you are divvying up the money? Because you've got 3 of them. You've got the adventurous fund down to the conservative fund. How are you now deploying that money to make sure your clients get the biggest buck out of their funds?
Okay, so we're taking a long-term view. We're looking at really what the fundamentals are, because in the short term, who knows where sentiment will bring prices, right? It's always a cycle of over-optimism and over-pessimism. And right now, we are diving into overly pessimistic territory. So the position is a bit defensive, but we're not out. We're not out of risky assets precisely because if you really look at your valuations now, I mean, the prices of your assets vis-a-vis what it's worth, it's really trading at bargain levels already. Except that, I'm not saying that it stops here, right? What we're saying is, if sentiment actually brings it much lower, then consider them as fire sales. I was in a talk recently, and I was recalling, where prices were Asian financial crisis and every crisis that has happened after. And those opportunities were what? I would call them opportunities of a lifetime.
Okay.
What is my, what if I knew then what I know now moment? And my regret is I will never see those prices again.
My regret is I did not have a crystal ball here
Yeah.
to actually check on what we're saying, but I'm going to hold you to that and say that it's cautious optimism down the line.
Yes.
Thank you so much for joining us, Angie. It's a pleasure to have you back.
Thank
on
you.
air.